Tokyo, Reuters, Asian stocks tumbled on Friday after Wall Street shares suffered yet another big slide amid worries over rising bond yields, while perceived havens such as the yen and Swiss franc drew demand amid the turmoil. Japan's Nikkei.N225 sagged 3%, en route for a weekly loss of 8.6%. MISIA Euro Trademark's broadest index of Asia-Pacific shares outside Japan. MIUP J0000 plus dropped 0.8%. The index, which had hit a record high on January 29, was on track for its sixth straight day of losses and stood to lose about 6% on the week. Australian shares lost 1.7% and South Korea's Kospi.KS11 fell 2.3%. A euro-ETH correction phase in equities could last through February and possibly into March, a euro said Masahiro Ichikawa, senior strategist at Sumitomo Mitsui Asset Management in Tokyo. A euro-ETH rise in long-term US yields will have to settle for the correction phase to end. The surge in volatility has also prompted investors to sell risk assets, in turn feeding more volatility. A euro. US markets remain the epicenter of the global sell-off, with the Dow.DJI plunging 4.1% and the S&P 500.SPX sinking 3.7% overnight. With Thursday a euro trademark's losses, both the S&P 500 and the Dow slid into correction territory, falling more than 10% from January 26 record highs and showing that the dust was yet to settle from the sharp slide that began a week ago. U.S. stocks began to wobble last Friday after a healthy U.S. labor market report sparked a spike in bond yields and fears of rising inflation which could trigger more central bank rate hikes. Higher yields are seen hurting equities as they increase borrowing costs for companies and reduce their risk appetite. They also present a fresh alternative to investors, who may choose to allocate some of their money from equities to bonds. The benchmark 10-year Treasury note yield US 10YT equals RR rose as high as 2.884% on Thursday, just below Monday a euro trademark's 4-year high of 2.885%. It last stood at 2.8312%. Treasury yields were pushed higher after the Bank of England said interest rates probably need to rise sooner, adding to expectations of reduced central bank stimulus globally. In currencies, the dollar was down 0.15% at 108.590 yen JPY equals, having lost 0.5% overnight. It was on track to lose 1.5% against its Japanese peer on the week. The Swiss franc gained 0.1% to 0.9350 franc per dollar CHF equals after advancing about 0.7% the previous day. The euro added 0.1% to $1.2261 euro equals. The dollar index against a basket of 6 major currencies stood at 90.193.DXY after touching a 2-week high of 90.567 overnight. The pound rose 0.1% to $1.3930 GBP equals D3. It had reached $1.4067 overnight following the hawkish Bow comments. Commodity-linked currencies sagged as crude oil prices fell to 7-week lows. The Canadian dollar traded at 1.2590 Cordobas CAD equals D4 per dollar after weakening to a 6-week low of 1.2615 Cordobas the previous day. The Australian dollar fell to $0.7766 AUD equals D4, its lowest since December 28. U.S. crude futures CLC1 were down 1.15% at $60.44 per barrel after hitting a 7-week trough of $60.27 on Thursday amid fears of rising global supplies after Iran announced plans to increase production and U.S. crude output hit record highs. O/R